Hey guys, Dave Keller here with Market Misbehavior. I think the number one question investors should be asking themselves at all times is, what is my investment horizon? What is my time horizon in particular? Because a lot of times I find as I'm coaching investors that their toolkit that they're using is not in line with their investment horizon. I'll give you two quick examples. Twitter data, a lot has been made in recent years about using AI, machine learning, et cetera, to go through soft data like Twitter feeds and read sentiment and pull out signal. Right? Is there some investable patterns you can get from tweets and the sentiment and so forth? And some of the stuff I've read says there actually is some signal there. Right? You can actually make money following some of these ways of analyzing Twitter feeds. The problem is it's on a really short time frame. So some of the studies I read told you that it was valuable for the next day or two on the Dow Jones Industrial Average, meaning if your horizon is that short, you can use that. Another, maybe on the complete opposite edge, is demographic data, right? So things like baby boomers retiring, et cetera, that is a theme that will play out over decades. So if your investment horizon is 50 years, which is probably beyond most of us, then that might be interesting to do. But the problem is between here and then, as those demographic shifts and themes play out, a lot of cyclical and even secular trends will fluctuate, meaning you will be caught on the wrong side of a lot of markets just waiting for some demographic data to play out 10, 20, 30 years down the road. So those are two extreme examples of where, if you're aiming at 3, 6, 12 months down the road, which most institutions are, and I would argue many individuals should be, if you're using either of those things, you're using a toolkit that is not in line with your investment horizon. You should be using things that will help give you a read on the next 6 to 12 months on the financial markets or in individual stocks or sectors or whatever it is. If you think about it from a technical perspective, the data actually plays out as well. If your time horizon is relatively short, meaning a couple days to a couple weeks, even a couple months, in general, markets tend to mean revert, meaning overall, you're better off buying weakness and selling strength and having some toolkit to help you understand that mean reversion. On a very long-term time frame, if your time frame is out multiple years, you're getting into the business cycle, which again is a cyclical thing as sectors and themes come in and out of favor. So overall, you should be betting on mean reversion. So when something's beaten down for 3 to 5 years, you probably can expect it's going to start to recover. The sweet spot in the middle is where momentum works, trend following works. And that's where the institutional technical toolkit, sort of what I'm familiar with, is designed to be employed. And that's looking 3, 6, 12 months down the road. And the statistical data will show you that you're better off not mean reverting, but you're better off following trends. So owning what has worked and not owning what has not worked, or overweighting what's working, underweighting what's not working, and looking at good 6 to 12 months of data as you're making that analysis. So my challenge to all of you this week is look at your toolkit, look at all of the information that you're gathering, and pay special attention to short-term information that you are applying to a long-term investment horizon incorrectly. So something like tweets about China, for example, are very short-term and they're going to cause short-term fluctuations. A overall trade deal with China that will take months, if not years, to evolve is the time horizon you should be operating on. So a lot of times we see a tweet, we see a little rumor, and we all of a sudden project that, we extend that, we extrapolate that forward to being some new trend, and that's incorrect. You're treating short-term data and you're extrapolating it way beyond what is statistically meaningful. So take a look at your toolkit. Make sure that what you're using is in line with your time horizon, your investment horizon. If this sort of thinking of investment process, decision-making, and investor routines is of interest to you, I hope you'll hit subscribe. Check out some of the other videos on my Market Misbehavior YouTube channel. Have a great holiday.